Good morning, everyone. My name is Mathieu Favas, and I'm the Economist finance correspondent. I cover banking and fintech, among other topics. I'd like to thank our sponsor today, Ecomark, for supporting the event and making it possible. It's a pleasure to be welcoming you to this roundtable, where we'll be discussing the future of digital banking and digital finance in general. Thank you very much for taking part. I'd like to mention as well that the roundtable is on the record, so we are recording the session, just so you know. And in terms of other housekeeping rules, all follow-up questions that we'll have during the conversation, interjections that you might have, please send them through me. I will channel them to various speakers so that the conversation can flow smoothly. You can use the raise hand function in WebEx. I assume you are familiar with that function to signal any comment or question you'd like to ask in response to a question that someone is asking, or if I ask a question and you want to comment. And as well, please mute yourselves when you are not speaking. Again, this allows the conversation to be a bit more smooth. Just to set the scene a bit on what we're going to discuss. So I guess it's fair to say, and I've written about it in a few articles for The Economist, financial institutions have actually reacted really well to the crisis, at least at the start. We've seen banks and other institutions react really quickly to put in place systems and functions and teams to respond to the crisis. They've boosted their own capabilities to respond to the challenge. But they also found ways to better serve their customers. Now, I guess the big question is, what is going to happen going forward if some of the shifts that we've seen in terms of digital banking and digital finance become permanent? What lessons are they going to have to internalize? But also what investment and efforts do institutions have to make to improve the digital experience and also personalize their services? The list of possible investments and efforts is really long, so we'll spend some time looking at what should be prioritized, what is worth spending some time and money on. The roundtable will also cover some of the key risks that financial institutions face in this period, and we'll look at how to respond to some of these. Finally, before we start the conversation in earnest, I'd like to introduce our host from Ecomark, Maciej Salata, who is the Consulting Director for Corporate and SME Digital Banking at Ecomark. I'll hand over to him for a few remarks, and then we'll get started. Over to you, Maciej.
Hi, thank you, Matthew. So I'm Maciej Salata. I'm the Consulting Director responsible for SME and Corporate Digital Banking at Ecomark. And we are a software house that has been providing digital banking solutions to banks such as ING, BNP Paribas in Europe, or even Siam Commercial Bank in Thailand. So we have quite a lot of expertise, and what I wanted to share with you during this panel is some kinds of insights on how those banks are dealing with such a crisis that we have right now. So thank you, Matthew. Thank you for the introduction.
First topic that I'd like us to cover today is the lessons learned from the pandemic so far, as institutions look to the future. So everything, as I was saying in the introduction, seems to have gone smoothly. At least from an external point of view, that's what we perceived. But is that so? What actually, if any, were the main pain points that institutions have had to deal with during this pandemic? Perhaps I can choose a volunteer for the first response, and I'll start with Ignacio, perhaps from BBVA.
Okay, thank you. Yeah, my name is Ignacio Brime. I work at BBVA. I'm an IT guy, been with BBVA for quite a long time. And so being in IT, one of the, so I guess we've been a bit in the front line during this pandemic, specifically, and I'm talking about Spain now, but it also happened in the rest of our geographical footprint. We had to make up plans very quickly in order to get everyone to work remotely, because as you may probably know, we've been with a lockdown for quite a long time. So we had to just these business continuity plans, which we all are familiar with in terms of setting up different parallel infrastructure, setting up new places to work, setting up communications and everything. I think that the main lesson was, hey, it was possible. It was possible to do it. It was quite tough. We never thought it would come the day when we had to do it for real, but it worked. And I think I have a feeling that things went quite smoothly from not from day one, but yes, from say week 1 or week 2, so we could work all remotely. And the second big thing was that probably bricks and mortar banking was not that necessary. So we have the feeling, probably forced by the circumstances, that a lot of our clients have really got used to do digital banking, or I should better call it remote banking. And that's no longer nothing to do with the younger generation versus the older generation or whatever, because the circumstances have moved all the different client sectors to work somehow remotely with us. So I would say those two are the main outcomes of the pandemic.
Thanks, Ignacio. I don't know if anyone else would like to comment on this precise point. If not, then I'll move to the next question, which is about what. Let's say.
I think that this is especially valid for all companies that we are currently, that are currently facing the pandemic. So the transition to remote work was something that also happened at Commer, right? We had over 6,000 employees, and suddenly we had to migrate them basically to remote working almost overnight, right? So this is something where you need some technologies like VPN access, that you are able to access the resources securely, right? So this is also something that happened, and I think it's touching all of us pretty much. And about this digital banking, so yes, the clients have changed their behavior. And this is, since the pandemic, it wasn't like a week or 2 weeks long, right? It has lasted for months. And it takes around 3 months from psychological point of view to change the behavior of a person. So people have adapted to digital banking, right? Just like people have adapted to watching Netflix instead of going to cinemas. This is something that is happening. And I think we'll see more and more transitions towards the digital in the upcoming future.
Can I come in?
Of course, Sylvie, please go ahead.
So Sylvie Matera, I'm currently advising the EU Commission on Capital Market, but I'm a former management board member of Deutsche Bank. It seems to me that it's very true that all the banks have adapted quite well to the new system working from remote working. But I'm wondering, in terms of the type of business, I don't think it's appropriate for all businesses. And I'm thinking about investment banking. Apparently, it worked quite well since the beginning. Still, there is some control that you cannot do, and that seems completely inaccurate to do it from remote. In fact, when I was working at Deutsche Bank, I was in charge of internal control. And for the investment banking, there is some rules like you don't use your private phone or things like that. And I wonder how you can apply those control if you work from remote. I mean, how it is possible to make the distinction between private contacts and business contacts when you do it from home. So I really wonder how the large banks can cope with the situation if it's supposed to continue for those activities. And given that it has been done for the last 6 months, I wonder what kind of future we can have in terms of, mistake that may have been made in terms of connecting client with WhatsApp, with your personal phone during that time. I just wonder what we're going to have in the future relating to those controls. So indeed, all banks have adapted quite well to the new situation, but maybe some business, it might be different.
Thanks, Sylvie. That's a terrific observation and really good question, actually. So I'd like to know whether any of the risk experts on the panel today would like to comment on perhaps how they've adapted to that in the first instance. We'll speak about what processes should be put in place going forward. But what has been your experience so far, Linus?
Yeah, thank you. So I'm Linus Fugl. I'm working at the Danske Bank. So the largest bank or largest financial institution in Denmark, and among the top 5 in the Nordic countries. So I just wanted to comment, and I would also like to comment also on Johanna's statement here. But firstly, I think what we have seen is in the Scandinavian market, where we are so fortunate that we have more than 99% of the population are, you could say, part of the official economy, meaning that everyone has a bank account, they have an electronic ID. So that has kind of been a strong starting point for us to make this transition to virtual. But what we saw from the beginning was an increased risk also of really taking this large step over to virtual. And I think this is also what Johanna was referring to here, that some of the things, yes, even though they potentially are technically possible, maybe, it does increase the risk of behavior that we don't want to see. We were quite worried also from a fraud prevention perspective that we would see an increase in fraudsters taking advantage of also our customers sitting only at you could say virtually being present in their daily work, because sometimes the physical presence will actually make a difference there. So in our bank, this is now for the internal side, what we did was we had some, you could say, some rules in place that not everyone would actually be sitting virtually. We did have restrictions on some employees still having to sit physically present in our premises. Partially, as you are also referring to, there are some guidelines for when you do, for example, as part of investment banking, that you need to be, you say, trading from a bank location, and you cannot use your own phone and so forth. So we had to put in some restrictions. So when we say we are working virtually, it's not 100%, but it's number-wise, it's pretty close though.
Thanks a lot, Linus. Very curious to hear the perspective of others too on this particular topic. If, for example, you have quotas of the number of people who have to stay in the office, and whether this is going to be the case going forward as well, because of course, what we went through could be seen as being exceptional circumstances, but is it the case that now some of these rules are being, I guess, integrated into the normal functioning of your institutions? If nobody volunteers, I may ask Defahish Das to comment on this.
Yeah, thanks so much. So we are, as you know, I'm from Mizuho, and we are a global bank. We look after the corporate banking outside Japan, and in Japan, we of course do corporate and consumers as well. So what we have seen is, number one, each country is different. The governments have taken different stance. So if I compare like Japan, for example, most of the people can still go to work with a mask, and they are probably working 20% or 30% of the time from home, because it's very secure. They all know how to behave and social distancing and everything else. On the other hand, we have countries like Singapore, where I am based. The rules are much stricter. You have rules where people more than 5 cannot gather in anywhere, in a restaurant, in a house, anywhere. And of course, every company, every industry has been given certain quotas. Like for banking industry, started with like almost 20% quota, and now it has gone up to 50%. So which means that not more than half of your staff can come to office. And those who are coming also, no one can come to office all the time. And you have to maintain a proper policy as well as a count of who are coming and who are not coming, and what time they're coming, what time they're going. And of course, there are tracers which takes care of anywhere you go in the country. You have to check in and check out. Every single shop, coffee shop, restaurants, everywhere else. So of course, the limitations are different in by country and by region. You have countries like India, where it's much more stricter. You have countries like Vietnam and Philippines, which is much more open. So we had to struggle with that. How do you have a framework where you can still collaborate? Of course, having the tools like whether it is Zoom or WebEx did help a lot. But collaboration, of course, doesn't happen so well in an online platform. We did have an option to move more collaboration on some aspects, because we could now see people from other regions, which was not possible before without visiting the country. So that was a positive side. On the other side, we also had people who were facing troubles in the families with their either the elderly people at home or kids at home who are going to school, not going to school. So it's a totally new paradigm we had to go through. But business as usual, business has to go on. Customers, fortunately, were more adaptive, more flexible to come on a WebEx platform, for example, to about what they need, or even sometimes getting connected through unofficial channels, whether it's WhatsApp or phones, which was not possible before. So we did have all those challenges, and the way we overcame the difficulties was totally different by country and by the size of the business and by the sector of the business. So that's what I would like to add.
Thank you very much for that. I'd like perhaps to ask a follow-up question on the question of working from home and I guess the concerns about security of data and processes. I'd like to understand better perhaps the role of regulators and whether they've been following developments, because of course they were quite permissive at the beginning of this period because business had to carry on. But what is the attitude now, and how has it been evolving over the period? Is it the case that they've been more cautious over time? And I guess, Sylvie, you're having discussions now on some of these topics, so perhaps you can start on that.
Well, I guess, I mean, regulators are like every other people. I mean, we are facing exceptional circumstances, so they do have to accept exceptional situations. That being said, I mean, they began to raise the not alarm bells, but to raise attention to some aspects which are not related to control, but which are related to the quality of loans, for example, because in all countries, it has been a huge political pressure in order not to stop the lending activity, but that at the same time, on the regulatory side, there is a huge concern about the quality of the loans that will have been given during that period. Regarding control, I guess there's something that is growing within the mind of regulators worldwide, but at this stage, they just don't know exactly how to cope with it. I mean, of course, everybody mentioned that what you do have in specific banks is you do have quotas, meaning that not all people can work from home, and you can still have the head of the teams, for example, in those very complex investment banking activities, that in order to, to agree on certain deals, have to be there on site. But still, I mean, it's something that if the situation has to go for a longer time, I mean, very specific framework will have to be thought through and will have to be put in place in order to make sure that, in fact, you can control everything. The rule in terms of investment banking is that everything that cannot be controlled and monitored is not allowed. Meaning, for example, using WhatsApp or that type of things, when you can't be able to control that, then it's not allowed. Given that it's very difficult to check that when you're working from home, there will be specific constraint in terms of being obliged to store your information somewhere, or to put in place a kind of audit trail or the contacts you may have on certain deals. So, but that's something that is not completely thought through at this stage. And but I mean, it's something that it's really that will come very soon, I guess.
Thanks, Sylvie.
Yes,
sorry, someone wanted to be?
Yeah. I also think that we are facing some kind of systemic change here. So right now, not many countries have introduced processes, I would say, government mandated processes that allow the users, the people of the country, to, for example, sign documents electronically, right? And this is something that absolutely needs to happen if you want to have, for example, irrefutable evidence when a person is signing some kind of document. So this is something that needs to be regulated by law, and I think that countries are not yet working on this as fast as they should be, because we don't know if there is another pandemic on the horizon, but we need to prepare for such circumstances, and that's why the governments need to take these matters more seriously in this way. And also, when we are talking about increased use of digital banking, for example, and this is one of the topics that I think Ignacio initiated. So when we are talking about increase of digital banking, we are also talking about increase of fraud in digital banking. So this is also something that will need some kind of framework when it comes to first of all the governments, but most importantly from the banks, because they have their internal regulations and they need to face this new challenge of let's say increasing number of transactions, increasing number of possibly fraudulent transactions through the digital channels. And I think this also needs to be addressed. One of the technologies that is very good, that can be put to use in such cases is, for example, artificial intelligence. We had some kind of POCs done with multiple banks where we were able, using artificial intelligence tools, we were able to reduce first of all, the number of false positives when it comes to fraud detection. And secondly, be able to catch more, I would say, systemic events. So systemic frauds, not like a single fraud being committed by a single person, and that could be evidently cashed by some kind of rules, but more on a, I would say, a distributed basis where artificial intelligence engine can analyze a larger set of data, and based on an analytics of different events that are happening that are apparently not connected together, but they are part of a bigger fraudulent scheme. This is where the AI comes in, and this is where AI can help banks investigate and detect such frauds. So this is another area that will need to be, I think, regulated in the near future.
So let's spend a bit of time on this issue, perhaps the issue of fraud and anti-money laundering, which is of course a massive topic in the current era of shift toward digital. I'd like to ask perhaps what I guess were the main issues that arose during this period, and what tools and processes you've been putting in place to remedy some of the short-term issues or short-term questions that were raised, especially on the fraud and AML front of things. Maybe Joanna Mancat, if you'd like to comment on this.
Hey, thanks, Matthew. First of all, good morning and good afternoon, everyone. My name is Joanna, and I'm not representing any particular company. I'm an independent director, and I'm actually working with organizations on consulting. Been with Credit Suisse for last 13 years, recently taken a break. So my thoughts on anti-money laundering and currently what the organizations have actually gone through the entire stages, not too bad in India, especially with the regulators having a lot of restrictions around it. The policies that were there were pretty good. And with India, I would say that we were already in a place which was much technologically advanced than many other banks that I had seen. So we were in pretty good shape. And also, while India, we looked at a lot of the technology that the way it has played a role is that banks in India already had two-factor authentication, that is two-level of authentication during whether it was electronic transactions or anything, and which I think helped. Not many organizations and countries were that far into the technology. In India, that was did by the regulators for each of the banks. Also, we not only had a two-factor authentication, but we also had the online payment, which was there since last 2 years. So it is not something that recently the change took place or people started using online payment methods or the technology per se. We were into the same thing since last more than 2 years, I would say. So we were in pretty good shape, Matthew. And that's where we did not face so much of the threats with the anti-money launderings or any other such issues.
Thanks, Joanna. And to Maciek's point, I was curious as well if you guys have been putting in place or exploring AI solutions and fairly sophisticated new tools to try and catch suspicious transactions. To what extent this was already really fairly embedded in the processes, or whether this was still at the exploratory stage?
It was in the processes from a very long time. So it wasn't something that we had to do it now.
Andrew, I see you've unmuted. Did you want to participate as well on this
Sure,
one?
yeah. Good morning, everybody. My name is Andrew Shields. I'm the interim Chief Risk Officer at Metro Bank in the UK. Interestingly, in this role, I joined Metro Bank on the first day of the government lockdown on the 23rd of March this year. So for the first time ever, well, the same for most of us, really. I've only ever done this particular role at Metro Bank virtually. I've never actually had a normal day in the office since joining. So, as one of the EXCO members, it's been an interesting challenge actually to be the chief risk officer in a bank with 4,000 people and 77 branches, etc. So it's been an interesting voyage. Just to very quickly run through some of the key points and catch up on some of the earlier questions in terms of what we've been doing at Metro Bank. We almost immediately put in place quite a sophisticated committee structure, which is quite an agile committee structure. It wasn't bureaucratic in any way to quickly make decisions at EXCO level about COVID-19 related subjects. And initially, that EXCO subcommittee met on a daily basis because we had a lot of decisions to make in terms of adaptation of controls. For example, the branches largely remained open with the exception of some particularly isolated periods, but they've largely remained open and have continued to offer a really excellent level of service, I think, to our customers. However, the internal controls around, say, like the finance function, for example, we've had to adapt some of our systems and controls quite heavily around that, particularly around making sure that we've got adequate segregation of duties for payments and all these usual sort of things. In terms of anti-money laundering, etc., it just so happened that COVID-19 coincided with a major level of investment that we were undertaking already in Metro Bank around improving our anti-money laundering, financial crime related systems. We've actually invested about £35 million into that project, so it's been quite substantial. It's also resulted in us having to have very, very regular meetings with particularly the Prudential Regulation Authority. They've been having monthly meetings with myself, but also with my other colleagues. So there's usually a weekly meeting at least with the PRA at the moment. So they've been very, very interested in how we've been coping with COVID-19, and I think it's fair to say we've coped very well with that. In terms of the application of artificial intelligence, this has been a bit of a pet project of mine. It's of particular personal interest to me. The identification of applications within financial services that are suited to artificial intelligence. And indeed, I've been doing a course personally at Massachusetts Institute of Technology around artificial intelligence recently. So I've set up a sort of in-house project at Metro at the moment to look at potential further applications of AI. One of those covers the anti-money laundering aspects and the take-on of new customers and the application of AI in quite a sophisticated way around that and mapping interrelationships between customers and transactions, etc. We're also looking at some other potential applications of AI around climate change modelling and other aspects of that. And I think also it's accelerated our thinking around identifying greater efficiencies and cost savings around certain quite manual tasks within the risk and compliance function. For example, the application of natural language processing to sifting through large volumes of financial services documentation, for example, and some applications of things like machine learning to certain basic processes within the branches, for example. So it's, if anything, I think COVID-19 has really accelerated not only a development of our existing thinking, but it's actually accelerated the pace at which we're starting to look at AI, etc. So it's been quite a developmental time, actually, in many ways.
Thanks, Andrew. And I guess this this raises the question as to how to cooperate with fintechs in some respect, because a lot of these projects, I suppose, are initiated internally, but on some occasions they will require also finding external services providers to explore some ideas, to partner on some technology that can't be built in-house. And I was curious to hear, perhaps from a few other members in a panel, as to how they've built these cooperations, what sort of partnerships they're thinking about, and whether that's going to be a core part of their approach to incorporating technology going forward more into the processes. Maybe I could ask Tina to comment on this. I see you're online as well. Maybe she's not connected just now. So I will perhaps ask Ignacio, I suppose at BBVA, this is something that you've been working quite forcefully on in the last few months.
Yeah, well, in terms of cooperation with fintechs, with the fintech environment, the truth is that little has changed compared to what we were doing in let's say pre-COVID times. One of the we normally host and sponsor here in Madrid like some congresses and events related to the fintech environment, where we are open to and welcome different fintechs and participants in the market to join, share ideas. We will have some kind of competition between them to select the best idea. And the thing is that everyone that takes place around May. It's gone. We did it. We maintained it virtually, of course, because we couldn't gather all together. But we have maintained, and let's say strategically, nothing has changed. So we keep on working and searching that environment. And of course, when the opportunity comes, well, we've partnered with certain fintechs for small proofs of concept. Some have gone further, some don't. Some just start a small project and then end up. But to my surprise, I think have gone perhaps a little bit more slowly than what it used to be. But I would have expected some more to basics things, and okay, let's forget about these big openings, big outings where we gather all together, and perhaps some break on that. But truth is, it hasn't happened. So so far so good, I guess, that everyone has had the opportunity to present new projects and start new partnerships with the fintech environment.
Thanks, Ignacio. I'm coming back to Tina because I think she was just having a few connection problems. Would you like to comment, Tina, on this specific issue?
Hi, am I audible now?
Yes, we can hear you. Yeah.
Okay, thank you. Morning, everyone. This is Tina Sethi. I'm the Chief Risk Officer for Rabobank Mumbai. I think, over the last few months, what we've really experienced is definitely a much more accelerated and a forced acceptance of doing things, digitally for, things that we always thought were actually required either in person or through physical documents, for example. So for example, a lot of our client onboarding documents, okay, typically these are signed documents, copies of passports, identifications, you would normally get from our clients and the related directors in physical forms. Okay, now what we've actually gone out and done is not only accepted the scanned ones, but a process of verification of the same through independent external sources. We've tied up with these agencies which are helping us do these things, digitally rather than in physical form. What we've also realized is that the process definitely has become faster, and a lot of solutions are being developed around getting around these issues. So I think, other than that, whether we are talking about having limited number of people in office and executing things pretty much at home. So for example, previously all of our trading and all of our the trading desk basically used to only operate from the office, but now we've actually had processes and controls built in so that the staff could actually be working out of home. Actually, for us, that's actually also pretty big insight, because it's a fairly small office with limited number of people who are able to come into office. India, as you know, had one of the strictest lockdowns. So, it was like getting these forced solutions actually allowed us to have alternate BCP plans also in place. So overall, I think a lot of learning, difficult times, but I think we've all come out of it far more experienced in being able to handle and come up with various kind of solutions to all of these issues. Yeah, that's about it.
Thanks, Dino. Thanks a lot for that. Could I also ask another perspective from Asia? If Swimming Ong is from ING in Malaysia is able to unmute as well, to give us the perspective and how she's been coping through this period.
Can you hear me?
Yes, we can. Yeah.
Right. Okay. No, I'm only a non-executive director, so from a distance. To attend the board meetings and the risk committee meetings. The team in Belgium and obviously in the Netherlands and in other relevant countries have all been stepping up to the plate and working from a digital sort of environment, and working from home seems to be working quite well. But as I'm a non-executive, I'd rather not make any comments here. But just the fact that everything seems to be working. Obviously, there are challenges, and it will be interesting, as you say, how various excuse me, artificial intelligence and so forth will be becoming more and more important as we go on.
Thank you. One thing we've not spoken about a lot yet, we've mentioned it in passing, is the consumer. And let's spend a bit of time speaking about that as well. So how attitudes have changed and some of the issues and I guess questions that are being raised thanks to that. First of all, we've heard it just in passing. The shift is really happening, and Maciek said he believes this is going to be permanent. I'd like to perhaps get a bit more color on this, more qualitatively. How has attitude change really in practice? What exactly are consumers doing online versus what they were doing before? How much of that is permanent? Perhaps Andrew, because this is something that I suppose you've been looking into as well.
Sure, yeah. I mean, certainly there's a massive swing towards doing things on apps nowadays and online. Metro Bank specifically still prides itself as a bank that offers a high level of customer service, and it still continues to appear in the sort of top 5 ratings in the UK for its customer service. It's very much a service differentiator, but we have been migrating much more towards the use of digital platforms, etc. As part of the Metro Bank app, through which you can access your various current accounts, etc., savings accounts. There's been a lot more artificial intelligence built into those apps now, so that the customer can get much greater insights around what's happening in their account. You know, the app will actually specifically pull out any suspicious transactions, duplicated transactions, unusual things that are happening, gives you all sorts of analysis and patterns of what's been going on in your account. You know, it analyses out the categories of your spending, etc. And that part of it seems to have been very well received by our customers, and there's a much greater migration towards digitization of the business banking side of Metro Bank as well. So I think generally this is all well received. I think also that, you know, I was talking earlier about advances in artificial intelligence, etc. A lot of these things are very exciting as developments, but where you get into potential hot water with some of them is that if you start to let computers make decisions relating to customers, there's obviously a considerably increased risk of conduct risk related issues arising where something goes wrong, maybe the customer isn't advised properly, or a decision is made which is not appropriate to that customer. So whilst a lot of applications of technology are quite exciting as developments in themselves, in such a heavily regulated environment as banking, for example, they have to be applied very, very carefully. Otherwise, it actually sets the bank back in terms of it increases the number of issues that the regulator is unhappy with the bank about, conduct-related issues, etc., which can be very time-consuming and very expensive to remediate subsequently. So I think the overall message is technology is a great thing, but has to be applied, with great care, I think, going forward.
If I may add, I completely agree with Andrew that technology is something that needs to be taken in some kind of, I would say, sandbox environment. So you have to test it first before you put it into production. But what is also important from the consumer's perspective, apart from being misserved by AI, is this whole thing that we call the user experience, right? So the clients, if they are to move to digital, they need to feel that the experience of digital is at least on par with what they experienced when they were served by the bankers in the branch. So this is about the digitalization, I would say, in a holistic way. So the whole life cycles of all of the banking products must be digitalized. The clients must be able to see what products are offered by the bank. They must be able to open those products. They must be able to transact using those products. And finally, close the products, all fully digital without ever having to go to the branch. And this is especially important when it comes to user experience for the more complex products, right? When we are talking about corporate banking, we have products such as, for example, trade finance, letter of credit, right? So those are products typically, I would say, user-friendly. Those are products that need to go through many rounds of negotiations between the bank exchange of documents, right? If we are able to digitalize those products in an efficient way by, for example, enabling the consumers to communicate with the bank using various channels like video chats, like normal chats, like exchange of text, like highlighting of text that has been changed in the wording of the documents, right? This is where the user experience plays a great role. When we are talking about the complex products that need to be digitized, we need to be thinking holistically on how the users actually experience the system, because if their experience of the digital systems is superior to the I would say analog ones, then they will be shifting even more to the digital channels.
If I may say something on this use of new technology, I must say that I would join the two previous speakers in the fact that you need to be very careful with the use of those tools. And I'm quite skeptical about artificial intelligence. I trust much more machine learning that has been mentioned by Andrew. But then the world is very clear, machine learning. So what they do is what you learn them to do. And so in fact, what is important is that the rules you put in place, and the rules have to be controlled in order to make sure that they will apply correctly in the future. In fact, in all those systems, you have two things. You have the rules that you tell the machine to apply, and then you have the data. And it's very important to have a clean data lake first in order to make sure that you have all the information you need. And then you have to apply to those data rules that you know and that you have been controlling all the time in order to make sure that, in fact, the machine or the artificial intelligence, how you want to call it, do exactly what you want them to do. Then in terms of data, you have a lot of different difficulties. First of all, to have a clean set of data is something that is really complicated, especially when you work in a large bank environment. But then you do also have to comply with specific rules related to data protection, which are quite unified in Europe, but may be different from what you can find in the US or in Asia, for example. And you need to make sure that all your system, in fact, allows to be also compatible with all the specific regulation related to data protection and the right of clients to see those data, to acknowledge and to agree to the fact that you use the data, and the right clients have also to delete those data at a certain time. So it's something that needs a very strict monitoring. And I guess that people should be very careful in this current environment, because sometimes if you want to, I mean, in fact, you do have to cope with exceptional circumstances. You have to do things maybe in a kind, not exactly as you would like them to do, but be very careful, because in fact, using those data and using machine is something that you absolutely need to control. So, and to come back to some of the discussion we had earlier, I guess that banks should rely on very classical tools in order to make sure that they apply the right control. I mean, the basic one, which is know your customer, is absolutely key in those difficult times.
Thanks, Sylvie. Very, very strong points. Linus, I think you wanted to comment on some of this.
Yes, thank you. And really interesting perspectives here, both from Andrew and Mathieu and Sylvie here. So a couple of responses here. So in terms of the consumer perspective here, in the Nordics at least, we have seen over the last years, we've seen this decline, for example, use of cash. And I think that we can fairly say that the COVID has kind of increased that trend towards fewer and fewer cash transactions in the Nordics. What has also happened is we can see an increase of use of contactless. People simply do not want to touch things. And lastly, also, we can see in our bank a significant increase in the use of virtual meetings with advisors here. So, and I'm back to Mathieu here, who's mentioned there has to be something in it for the customer. And I think it has actually shown that this increased flexibility, that customers can get a meeting more or less instantly, because we can utilize our advisors throughout the branches, throughout the country in a positive way. So, and then I wanted to comment on the technology aspect. I fully agree that we need to be extremely cautious. And I would say here that we also, I think, are considering that, well, I think at least in our course, we have started to consider, well, we need to remember that we're not going from a current perfect situation. I mean, whenever we have manual intervention currently, we're also making mistakes, and we're kind of, in a need of balancing also the current state where, as soon as a human being is involved, we will also make errors. And then I think in our case, we've done some thinking on this, and what we have realized is that it's not so much the technology which is the problem, it is quickly turning into all the processes around it. And when we want to implement technology, what's taking time is not as much the technical implementation, but the fact that we really need to be cautious about our processes. So as you were saying also, Sylvie, that it becomes very visible if a technology is implemented and we don't have controls in the manual processes, all the setup around it, then it's a disaster, right? So yes, we need to be super cautious, but on the other hand, I think it can actually improve the quality, because we are not perfect today when we have manual intervention. Thank you.
Thanks, Linus. I think you wanted to comment on some of these points as well. Let me know, so.
Yeah. Just a quick, I think, point that I wanted to make was about when we talked about, and Sylvie mentioned it very aptly, about the data that we are collecting, and these times that we are doing probably all the more than what we did before, because of ensuring that we have the right data, and too much of data, and with AI coming into picture, I think that makes it all the more difficult. What machine learning can do is something that we can rely upon, but there are times when this data, especially when we are not face to face, is something that we definitely need to be more and more cautious about. Also, what I think Linus mentioned about consumers' comfort level on what the banks is doing, how much of it is that the data is being taken care about. I think that banks will have to ensure, and especially when we are supporting businesses, because in these times the consumers are also aware that a lot of pressure is on the businesses to keep on with the revenues coming in. And if there are any shortcuts that take place, I think that will be the catastrophe that we are looking at. So not going through any shortcuts, maintaining the current paradigms, the processes that are there in the organization, I think that is of paramount importance.
Thanks very much, Joanna. Ignacio, did you want to comment on this as well? I saw you raise your hand.
Yes, so I fully agree. I was smiling when with Andrew's remark, because I see, being in technology, I see that we probably have a lot of, there's a lot of hype, or there are a lot of solutions in search of problems instead of posing the question the other way around. So I guess that the use of technology is not 1 or 0. So we're not going to fully digital, except for some cases. And I fully agree with what Sylvie was saying regarding the controls. Now the truth is that, okay, machine learning, which can be a very helpful tool if used for our existing processes. It can virtually help a lot in terms of manual processes where we can automate them, and we can help a human being being more efficient and more productive. Now, the thing here is that, okay, it poses a new problem, that there are new processes that take place in the actual building of that machine learning and of that automation learning, which has to do with, okay, new controls. How do we design those processes? How do we build them? What controls are we going to put in place in order to avoid all those bias effect that artificial intelligence has by itself? Now, it poses a lot of questions related not only to the traditional processes of a bank, but rather to new things that can come up with the deployment of these processes. So yes, it can be very helpful, complicated, and it will bring new additional functions, roles, and need for controls within the whole value chain of producing that software and those solutions. And in my opinion, it will not go, except for certain cases, from 0 to 1. So we will probably, for a lot of cases, be somewhere in between. So new technology or new applications of that technology helping existing processes rather than directly substituting them for something totally new.
And I completely agree with Ignacio, right? Artificial intelligence is just a means of helping people. When we are talking, for example, about the KYC process, right? The most tedious part is collecting the financial information, collecting the reports. Let's say if you are onboarding a corporation, right? It's a big effort. It usually takes maybe 1-2 weeks, even more. So if we use artificial intelligence in a way that we, for example, it can gather this information for us, to gather those statements, gather other information about the relations of people between the companies and so on. This is something that can be put to use, but it needs to be supervised, right? And traditional artificial intelligence is difficult to supervise because it's more like a black box that gives you results that are pretty much independent they are not dependent on any rules that you have set in the system, right? That's why I think the explainable AI that is currently gaining momentum will be even more important in the future. So this is a kind of AI that is able to explain itself why it took certain decisions along the way. And this will be important, especially when we are talking about highly regulated processes, where the AI will be able to explain why such a user was, or why such a client was, for example, rejected for this particular loan application, because this is something that is mandated by the law. And I think this is going in such direction. Of course, explainable AI, it requires more computing power, but it still needs to be understood by humans in order to be applicable on a wider range of problems.
Thanks, Maciek. We have a few more minutes, so I'd like to bring in Oyut if Oyut is able to hear us and speak with us to give us the perspective on the Mongolian market. So how have consumers habit change? How has technology been involved in allowing that change? And what are some of the issues and problems that you faced?
Okay, so good morning and good afternoon all. It's evening in Mongolia. So I must say that like we've been going smoothly until last week, and on November 12th we went into a full lockdown. And now even pedestrians are not allowed to walk on the streets, and we have like a very strict lockdown measures being taken. And also the government took measures to support the consumers and the lenders. So they issued a new regulation that says the non-bank financial institutions and banks cannot accumulate interests, and the lenders can take how do I say can extend their loan for up to 6 months without any interest and no principal payments, and nothing would happen to their credit scoring. So these are hitting us hard, because for the last week since the lockdown, there were no repayments at all at our institution. So it's kind of hard, and it's been only a week. So I don't have much to say. I don't have anything to say, because we don't have enough experience with these lockdowns and working from home. We're just starting to learn, and we're starting to experience these things. So I really appreciate everyone sharing their experiences. Thank you. So I don't have much to say at this point of the time. So
thanks, Oyut. Interesting to hear how fast the changes have come into your market. One question on corporate banking, transaction banking specifically as well. I'd like to bring in Devashish on this one. We've been talking about how consumers' attitudes have changed and the issues that have arisen linked to that. What has been the case in particular for corporate banking, which obviously is a different segment, and in some respects, if you look at trade finance, was a bit further away from being digitized?
Yes, definitely. I think we talked about technology, and technology has been a big enabler. Now, what has happened is some cases, the digitalization, many aspects of digitalization was there in the market. Some of the solutions did exist. Now, many banks have been moving forward even before the COVID-19 in adopting those technologies. And the other banks probably were taking time to make a decision. So what we have seen is, someone mentioned about the acceleration of digitalization, which we have seen in some markets specifically. Like we talked about India, where the government has allowed digital documents to be used for some of the processing of exports and imports. So that has been adopted by many banks. Most of the banks have been trying to utilize that and giving it as a channel to their customers. And of course, there are other markets which are much more regulated, where the adoption is not that fast. Trade finance, of course, as we all know, document digitization and also approvals do not change so fast. So it's been a bit of a slow, it's been adopting at a very much slower pace compared to on the cash management side or on the liquidity management side, and even cash flow forecasting. Adoption of those are much more faster on the corporate banking side. I must say that even the interaction between the corporates and the banks have become much more digitalized in a way. Now, most markets do not allow you to have face-to-face meetings, but business has to go on. You still have to process your transactions. You still have to make your payments. You still have to make your salary payments and everything else. So that has moved much more faster. So whichever bank was probably on the sidelines, we have seen them accelerated. The mindset which was there before, people were waiting for it to happen. Now they have been happening much faster. So that's a big change on the corporate side, I must say. The only question now I have is, and which other banks are also facing, is once we go back to what we call the new normal or the next normal, how much of this is going to be sustained? Because the compliance and rules and everything will come back. and they might enforce some of the more stricter rules. So that's where we will have to see how things pan out in the months to come. And we hope that most of the changes which have taken place will continue in that space, so that we move forward from there, instead of taking a step back and trying to make it more compliance and regulation perspective. Thanks.
Thank you very much. Unfortunately, of course, I have many more questions, but we have to end it there because we've run over by a few minutes, and we started late. So I wanted to make sure we could cover as much ground as possible, but we probably need to end it there. Thanks a lot, everyone, for taking part. It's been a really fascinating conversation. I take away that changes have been happening really fast, and in fact, that has raised a lot of questions that still need to be answered, especially with regards to privacy of data, security, and consumer attitudes. So we'll see how much of the changes remain after, I guess, the lockdown end in the various markets that you are active in. But it does seem like the thinking about the processes has already started really in earnest, and has borne quite a few fruit. We've heard about a lot of initiatives today, very interesting, very promising, that have managed to solve a few of the problems that we've raised. We've also heard that the dialogue with the regulators is progressing, and they are keen to catch up with the questions we also discussed. So thanks everyone for sharing your perspectives. I'd like to thank Comarc again and Maciek for making the event possible. We will be having more events at The Economist in the near future, so sign up for dates from The Economist events or log into events.economist.com if you'd like to find out more. Thanks a lot again. Enjoy the rest of your day.
Thank you.
Thank you. Bye.
Bye.